Hey guys, what's good? Hitori FX here. Welcome to the 29th episode of the weekly market outlook with TradeXProp. Now, in this episode, I will be covering the DXY, the NASDAQ, gold, GBPUSD, as well as Bitcoin. Okay, so without further ado, let's get straight into the video. Now, let me just recap a bit about what we saw last week in terms of fundamentals. Okay, so let me pull up Forex Factory right here. Well, last week we actually saw the European PMI data come out, as well as the UK PMI data coming out, and all of these readings, as you can see on the right here, they are actually below expectations, which is actually below 50. I think for Germany it was 51, and technically with these figures it actually highlights potential contraction, or even some people might say that we are in a state of economic contraction with slowing business activities, maybe in services or manufacturing. And basically what this means is that when you contrast this with the previous US PMI data, it could mean that we are going to be seeing potential stronger US outlooks, right? It's gonna be a boosting for the dollar, as well as influencing markets like Forex or gold, and of course indices, because the PMI data, it basically showcases to you the weakness or strength of certain sectors in terms of activity, especially in the manufacturing and services industry. It showcases to you just how we are contracting or expanding, and that basically gives you an insights to just how strong the overall just country is performing in terms of GDP, in terms of all those economic factors. And coming straight back to the charts right here, we have the DXY. Now I'll focus a bit here, but I'll also jump between this and other asset classes. But first off, we do have the latest unemployment claims that just came out, slightly better than expected. It showcases fewer jobless claims than forecasted. If I just come over to here, we had an actual of 217k jobs compared to the previous of 221 and the forecasted 224. Now this is a positive indicator for the US economy, since it signals a more robust and growing labor market. So this is a good news for the DXY, and this could potentially push it higher, even though if you look at the charts right here, we are in a super overextended markets right now, just based off of the charts right here. So I am expecting a potential correction sometime soon once we have hit a higher time frame level. Okay, but coming back to other asset classes, let's take a look at the 10-year yield, because the 10-year yield has also been in upwards momentum push, right? Although we have seen potential sideways movement, to maybe tell us that, hey, we could be edging a bit lower. We're seeing a kind of stagnated market right now, and this is kind of worrying after seeing such a big bullish movement, but on the off case that since we are still ranging, we don't know if it will push higher or push lower. On the off chance that we do see the bond yields start to push lower, this is actually positive for other riskier asset classes like stocks, indices, and cryptocurrencies, for the reason that higher yields, they typically result in just higher borrowing costs, which could potentially suppress consumer spending and also slowing economic growth, right? So the current yield is at around 4.4%, which actually showcases that current yields and borrowing costs are still somewhat manageable. It's not completely super duper high, and this is gonna support risk on trades like stocks or cryptos or currencies or other things. But the fear is that if the yields they do continue to break to the upside, we could see the market sentiment being dampened, and that could also hurt the potential growth for higher risk assets. Okay, so coming back to the DXY, we're gonna see some correlation there, which is actually surprising because despite the good data growth right here for the unemployment claims, we saw positive data. We don't really see a large move. Instead, we actually saw on Friday, we saw a move higher, yes, but also we ended the week with a kind of like I wouldn't see indecision, but the candle here isn't really too convincing. We showed a large wick rejection to the upside, rejecting off of these areas of 107 and 108. If you go to the left, we have these two areas of structure that's previously rejected price lower. So we didn't really see a huge push move higher compared to some of the moves that we've seen, which is what investors they want to see when they are being long on the dollar right here. And probably, this just means that it's not strong enough to signify good or at least overbearingly positive sentiment in the markets, since investors are probably still waiting to confirm data on how the economy is progressing, or in some cases recovering at this point. So we do have the end of the month coming soon, so it would be kind of wise to wait for next, or at least the next 2 weeks. We're gonna see the NFP report come out sometime soon, so it might be a good time to wait for that report before being overly cautious on longs on the dollar. Okay, so right here for next week, what I'm expecting price to do is we could continue ranging after being stuck in this price action right here. But if we do break above 108, we know we could potentially see the markets transverse higher right here into 1010, because looking to the left, we do have this large area of imbalance, or at least clean traffic, to fill in this move right here, and it is around 2000 ticks, so a sizable move for sure. But if we do drop beneath down into 106, these two price points right here, I'm curious to see if we could get a sustained move higher to retest this wick at around 108. Okay, because currently I don't think we're gonna see a break lower. Fundamentally we are still bullish on the dollar, so I'm just curious to see how we are going to trade within this price range of 106 to 108. But if we do break beneath 106 with conviction, I do think that we are going to be seeing moves lower into some of these structure points right here, maybe around 104, to retest the price action to potentially continuing higher. Okay, so that is pretty much it for the dollar index. Let's see how that translates over to, oh, that's not the correct chart, to forex.com. Right here we have gold. Okay, so now gold has been on a really bullish run all the way from the lows. Right here we have come up around 6% plus, around 1,500 points actually right here on gold. Short term to mid term, I am actually neutral on gold. I don't really have a clear bias as to the fundamentals for a few reasons, right? The first one is actually because of the dollar index, right? We are seeing lower interest rates, and even though the Fed is likely to still continue cutting interest rates, the Fed has actually shown and gave comments on how they are likely to slow the rate cuts, even though they're still likely to cut it, but just a bit lower on the rate cuts. And with that in mind, we are seeing a potential, I'd say, global war crisis potentially on our hands, even though I wish that doesn't happen. But if we do see the uncertainty escalate further between Russia, Ukraine, and the US, we might see a really sustained push move higher on gold, because for those that don't know, gold is a safe haven for many investors and traders when we are in a state of political uncertainty, right? Especially when you have threats of wars that's probably gonna see an outbreak soon. We might see gold start to move higher right here. Okay, and it's not that just because there's a war coming out we're gonna see gold push higher, but based on past data, whenever we have threats of wars, we always see a bullish run on gold. Okay, but until that threats of war is confirmed, we don't want to be too bullish on gold, especially after such a large push higher. Ideally, if you want to get in onto this move, I would say a pullback lower to find some support, continue higher is pretty much the better play right here. Especially when you are overextended like this, it's really easy to say, oh, it's gonna keep going higher, because gold doesn't mean revert that much, meaning it doesn't do pullbacks as much as other currencies do, for example. But definitely right now we're just a bit too overextended. I do think coming into these previous structure points at around 2716 and 2744, people might see this as a place to do profit taking for some of their positions, and that could induce a influx of selling pressure into the markets. But if that does happen, I think that's even better, because now you could get in at a better price. Okay, but as of now, we don't really have any levels for me to determine that support is going to be found. So if it does pull back, I want to wait for a daily bullish candle close with a healthy body to wick ratio, and then use that as potential support to continue higher, right? But if we do break above 2716 and we do push higher into 2744, these two levels are great potential areas for price to use as a break and retest support to keep going higher into making potential all-time highs, right? As of now, I'm still neutral. Right? But looking at the charts in itself, you might just say we are pretty much bullish. So do with the information what you will. Okay, so that is gold. Now let's move on to something a bit different. I will be covering the NASDAQ on NQ right now instead of the S&P, because I think that the moves on NASDAQ are a bit better. Okay, so for those that don't know, the NASDAQ is a tech-heavy stock index, and we saw this, I wouldn't say large, but it is a bullish movement. And this is pretty much caused by, I would say, Nvidia, right? Nvidia's earnings, their report came out really great, and we saw a somewhat corrective, but still an upward bullish movement on the NASDAQ. But the rally wasn't really like explosive or anything like that. It was pretty short-lived. As of now, it's a bit corrective. And that it's basically because the US Department of Justice, which is taking action against Google, you can read up on that, but this basically caused a evened out or balanced out the great earnings from Nvidia, which has a heavy weightage in the index in itself. So pretty I'd say corrective in a sense. It kind of balanced itself out. So I'm curious to see if we could see this continued corrective move higher into retesting these highs for potential drop lower. But if we do start ranging between these zones, it's a bit hard to trade based off just the daily in itself. I much prefer us to reach this level to see a break and retest, or for a rejection lower. If we do break beneath the 20k mark right here, we could see a potential correction down into these two levels of support right down here at 19k and just a bit over 20k. Okay, so that's what I'm looking for on the NASDAQ right here. The S&P is still moving, of course, but I just figured I'd like to cover the NASDAQ in this week's episode because it's showing potential great signs depending on if we reach this area of resistance or break this area of support right down here. All right, so moving on to the next pair, we do have GBPUSD. So right here on the pound dollar, or cable as some people call it, on the FXCM data feed, short term to mid term, I am bearish on this pair. Just looking at the technicals, we are making this kind of lower lows, lower highs formations. But taking a look at a bit of the fundamentals, is that we are seeing the pound and the euro, they're being sold off due to their respective struggles in their economies, right? I think that a lot of people have been trying to catch this as a low to be buying in the form of pullback. I don't think people, or retailers at least, should be tempted to buy low, quote unquote, because falling currencies, they don't necessarily mean value to buy if the sentiments or the fundamentals are showing you weak datas. Okay, so for example, like we went through the UK retail sales and the PMI data, it's showing you weak information, right? So weak pound, weak dollar, right? And that's showing you that this trend that we're seeing right here, it could persist if it doesn't turn around anytime soon. So you should try to at least position yourself alongside the trend, whatever that you use to identify a trend. But you can clearly see that we're making lower lows and lower highs right now. Okay, instead of betting on reversals, try to get in on pullbacks to take the market lower. Okay, and actually here on cable, we are at a previous area of daily support at 1.24 800, and if we do reject this area, we could see price continue higher into 1.269 right here and see price reject lower. Of course, we do have this previous support. We could use that to turn into resistance at around, let me just pull this, at around 168. But until that happens, I'm not trying to say that we are going to reject off of there, right? How I personally look at my key levels. I want to see price come into a previous area of respected resistance to take price lower. Okay, so definitely I'm interested to see if we could see a pullback to correct this slight move to push price lower. But if we don't see that, then we might see something like the markets coming down and breaking this support at 881 and seeing price coming down to retest this wick right here, or even better, crashing all the way down into 493. Okay, so just around these price points, I'm still bearish on cable, and I'll be expecting this bearish trend to continue. All right, so last but not least, let's take a look at Bitcoin. Right, Bitcoin reached all the way up into 99k. Wow, it's so close and just edging the 100k mark. So I think we're definitely gonna reach it this year before the year ends. We could see people selling off their bags, and then we're seeing this slight pullback right here. But I think this is gonna be a fake move to take out early sellers, and I think that is gonna be used as liquidity to push price higher into the 100k mark. Analysts all over the globe definitely are looking at the 100k mark being reached before the year ends, and I share the same sentiment because technically we are in a risk on environment, and historically it has performed well in times of uncertainty as well, so looking at the charts, we do not see any signs of weaknesses at all in this large push move higher. We have seen a rise of almost 50% all the way from the lows at around 60k, 67k. So definitely looking for trading ideas after we hit 100k. I'd advise against you putting money in at 100k unless you're short-term trading, but it's a bit too overbought at this point. Definitely a slight pullback into maybe 70, 80k would be a good price point to enter at for the long term, but I don't think we're gonna reach into 60k, because that would be a drop of 40%, and then we're closing off this entire move. But definitely a move into the 80, 70k mark at this level of structure is definitely possible right here. So yeah, not much to talk about on Bitcoin really. Just wait until 100k is reached, and then you could see very short-term movements, maybe for profit taking, in that retracement, or you could look for retracements just to buy up in discounted pricing. Both of them work. It depends on what kind of trader or investor that you are. Okay, but Bitcoin, I think, is definitely one of the asset classes that is going to be seeing higher prices in the long run, right? But as of now, not much. We could see a pullback into 87 and go higher, or come down lower, take out these structure points, and then reverse in form of a fake out right here, or reach 100k first, and then stagnate a bit, take out highs, come down lower, and then see a full-blown pullback before that new high is made. So definitely waiting to see where price takes us, because as of now, not much levels for me to base my ideas off of, other than these nearby daily areas. All right, so yeah, coming up next week, we do have a few news releases, right? We do have high impact news on the DXY on Tuesday, Wednesday, and Thursday, with a bank holiday on Thursday as well, alongside FOMC minutes. So definitely keep this in mind when you're trading. Always make sure that you are in line with the news rules at TradesProp, and don't blow your account over stupid and impulsive decisions. Okay, yeah, so that's pretty much it for this week. Anything you want me to add on, new asset classes, new coverage, just leave a comment down below, and I will definitely add it into it in the next weekly outlook. Alright, I will talk to you soon. Bye bye.